Michael Burry from The Big Short is in the news again, and we're going to talk about the Chief Revenue Officer, or revenue in general. Enjoy. Welcome, everybody, to the Age of Jeremy. My name is Jeremy Quintanilla. If you're new to this podcast, it is a podcast all about my business adventures and side quests. And you can see all that amazing stuff on my social media at Age of Jeremy. Wherever you get your social media, you'll find it. And you can also check it out at Age of Jeremy on YouTube. And I am really excited because this week, in 2 days from when you're hearing this, I will be recording a full live segment from Junior Achievement in Arizona at their BizTown as I move into taking my, journalism and reporting to the next level, or my podcasting to the next level. My goal is to always continue to get better at this and to share my entire life with everybody until the day that I die. In fact, if I have it my way, as I'm dying, it will be recorded. And you will see my death or hear my death in podcast. And that's why I think all of you should follow The Age of Jeremy, because it is all the exciting stuff that is going on with my businesses, so that you can take what I learn and you can apply it to what you want and what's going on in your life. So make sure that you head on over to YouTube at Age of Jeremy and like and subscribe. Also, if you could, please make sure that you go over to Mercury by Age of Radio, like and subscribe, because my Mercury show about podcasting and pop culture news, we do that live every single week on Friday at 3:30 Arizona time. And before that, at 12:15 Arizona time, we do the New Wealth Transfer podcast, which I'm so blessed and grateful that they're letting me be on that show, even though I own the company, just because it's really growing my entire social media from that, which allows me to talk more about my businesses, what I'm doing, and get more people into my Instagram broadcast channel where I talk about all the things that I am investing in on a regular basis. I just made some great moves. I added into my portfolio. My main portfolio is with Charles Schwab. And as you guys know, I'm going through a divorce. And so originally I was moving all that money into into a traditional IRA, and I was breaking it up between Corning Inc. and the XLP, which is Spider Shares Consumer Staples ETF. And I was doing that break so that I had less risk in that portfolio, and then also going into Corning because Corning owns Hemlock Silicon Semiconductors, and it is one of the largest polysilicon fabricators in the United States. So what a lot of people don't know is that silicon is very abundant. What's not abundant is that conversion, if I'm saying this correctly, into polysilicon. And Hemlock, I think is the name of it, or Corning owns a company that does that, and their stock has been doing really, really well. So I wanted to add that into my retirement portfolio. But then on the flip side, I was missing out on some dividends, and I was waiting to get my Daikokuten Investments checking account set up because I needed that to be set up so that I could have money come into my Charles Schwab account and for it to hold the specific assets. The problem is that my Daikokuten Investments LLC, it's owned by my family trust, and my family trust is not been notarized or witness signed yet, which we are doing this upcoming Saturday from when you're hearing this. So once that's done, essentially what has to happen is the bank has to make a profile for the trust, and then that profile for the trust owns the Daikokuten Investments LLC. And then from the Daikokuten Investments LLC, that is going to own the checking account. And then the Daikokuten Investments LLC will own the account that's with Charles Schwab. So again, I'm a big fan of Charles Schwab. I recommend that you guys check that out. One thing that I love about Charles Schwab is they do fractional shares. So when I built out the dividend portfolio in this new individual account, which I'm going to talk about in a second, when I built that out specifically, I did not have to buy full shares. I can just buy the amount of dollar value of what I want to own in those shares, and then I can start getting access to it, which in my opinion, fractional share purchasing allows everybody, no matter how much money they have, to start investing into the stock market. And as you know, I'm a big fan of investing, and I'm a huge fan of the stock market, and especially how corporations are created, even though I'm very critical of capitalism, which I think we should all be very critical of capitalism, because most of the problems with our society and most of the benefits from our society can be contributed to capitalism, and we must find something that works better for all individuals in society. Now, that being said, I have an individual account in the meantime, so I decided to put less money into Corning and into XLP, which is the Spider Shares Consumer Staples. And from putting less into that, I started building out the dividend portfolio in an individual account that my wife is not on, even though in the state of Arizona, she technically would still own half of it. But she's not on it. So then I was able to buy that stuff so I could start getting the dividends. Okay. Because in Snowball Analytics, which if you follow myself in CJV, we talk a lot about Snowball Analytics. It can give you what you're getting from your dividends annually. And currently, based off of my portfolio, from my dividends, I'm only getting about $9,000 annually. So my goal is to get that to about $50,000 to $100,000 over the next 2 years. That's just coming in from dividends, because again, that dividend income can either be used to live off of, or it can be to invest in other assets. And that's one of the key things that we teach in our capital DR process. So again, I talk all about these things that I'm mentioning to you right now. I chat about them. I talk about them inside of my broadcast channel on my Age of Jeremy at Instagram. So go over there and subscribe so you can get the scoop of what I'm specifically investing in. And if you're wanting to know how the process works and to learn how you can do it for yourself, join our 3T Warrior Academy. You can go to 3twarrioracademy.com to learn more, not to lose more, to learn more. You'll gain. So every week I get a certain dollar amount that goes into my account. And of that, I am building out the portfolio in these things. So there's a portion of it that's equities that is based off of high risk, mid risk, and low risk. Okay. And there's also ETFs that produce dividends. So the whole purpose of these things that I'm going to mention to you is to create dividend income. Okay. And they're diversified with different risk levels to kind of hedge against some of that risk, but still be able to produce dividends. So real quick, so you can understand why this is important. And if you want to learn more, you can check us out at 3T Warrior Academy. But I have Abbott Labs. So these are the equities: Abbott Labs, Clorox, Kimberly-Clark, the Coca-Cola Company, Medtronic, Strategy C, which is super high risk, Strategy C by Strategy B, Michael Saylor's company, Walmart, and then Exxon. Okay. Then I also have, so those are the equities. Those are the things that are considered equities. Strategy C is preferred stock, essentially, for Strategy B. For the most part, you can think of it in that capacity. And then for the ETFs, I have Coney, which is a option income strategy by YieldMax for Coinbase. I have Fiat, which is a short option income strategy for Coinbase. I have iShares iBox, a big fan of iShares products, which is a high yield. Give me 1 second. Hold on. Let me just move this back. Okay, so it is high yield dividends companies. And then I have JP Morgan Equity Premium Income Company. I have Oxford Lane Capital, so I could get exposure to some credit markets. And then I have Schwab International Dividends to get access to international dividends. And so again, the whole purpose of building this portfolio is to put money into it so that it can get me to that $60,000. So of that portfolio, if I get $100,000 into that portfolio, it should generate me somewhere around $40,000 to $50,000 a year. Okay, and I'm still playing with that, but that's the reason why I use Snowball Analytics, because it lets me create portfolios and see if I dump an amount of money into it, what could my dividend income be? So again, I just encourage everybody out there, if you're not involved with it, learn how the stock market works, learn how dividend stocks works. Even if you don't want to come into our 3-2 Warrior Academy to learn about it, I don't care. It's just, we are not educating the children, we're not educating the adults in a way to make them savvy when it comes to creating income for them for their investments. One of the things that I'm a big fan, that I'm not a big fan of, I guess is the wrong way to say that. I am an advocate for us as financial advisors. Well, financial advisors, I'm not a financial advisor. I'm an advocate for financial advisors making sure that they are communicating with people, that you don't just want appreciation, you want income. And if you can have a piece of income that's coming to you to live off of while your stocks can stay there and appreciate, we're not doing justice as advisors, or advisors aren't doing justice for people when they don't teach them about that and create to them some type of dividend portfolio along with an appreciation portfolio. And that's what we try to educate people with as in our Capital DR system. And again, we're not financial advisors. We are financial educators. Michael Burry, you might remember him from The Big Short. He was played by Christian Bale. Christian Bale did a fantastic job. Big Short's one of my favorite movies. Michael Burry is warning of a stock crash as tech jump echoes 2000 peak. Again, why diversification is important. Michael Burry is warning that the Nasdaq 100 index is headed toward a dramatic reversal after a parabolic surge. Burry said that market resembles the peak of the dot-com bubble and that the Nasdaq 100 is trading at 43 times earnings, which he believes is well above the implied level. He advised taking profits from the recent rally and reducing exposure to stocks, particularly those from the tech sector, saying that the consequences of not doing so will be unavoidable. The investor was made famous in The Big Short, and he is warning that we are going to get a large pullback. And if you listen to myself, CJV, if you listen to the New Wealth Transfer podcast, that is something that we have been talking about for weeks. And I've been talking about for years. It is unrealistic that our stock market is moving in the way that it is moving right now. And the way that I look at it is when we're starting to think to ourselves that this doesn't seem realistic and it's too parabolic, or it's parabolic and it's crazy, or it's exponential, that we're getting towards that peak. And so more and more news comes out like this, where we hear it and then we start to sell off, and then eventually we get a very, very large sell off. And also, too, Michael Burry does have a Substack that you guys can join if you go follow him on Substack. Again, he is a big, essentially, go watch The Big Short. And he had a hedge fund that did very, very well. Now he just manages his own money, but he also does provide information out to people that maybe subscribe to a Substack, subscribe to his investment newsletter. And it's really important that you go and research these things, that these are the kinds of people that you follow to kind of get an idea of what their sentiment is. And then you can take that knowledge or take that education, and then you can figure out how you could apply it to what is going on in your situation. I'm a big advocate for sovereignty of your life, you taking ownership of your life, being able to do things yourself. But again, when you're doing things yourself, you still need to be able to find the resources so that then you can get an idea of how you would do it if you're doing it yourself. If you learn and you educate yourself, you will be able to make better investing decisions than going to an advisor who probably doesn't even know what the fuck is going on and is only listening to people that are doing research from their main corporate offices and just telling them what to feed to people. And then sometimes they're getting kickbacks for offering certain things to people. And so again, they're not doing really the fiduciary responsibility that they say that they're doing. And again, that's one of my biggest complaints and one of my biggest, I guess, arguments against the financial advising industry, especially when they're getting paid a percentage of assets under management. But again, you might want to move out of stocks. You might want to put it more into bonds. You might want to go into cash. Again, I usually have like diversify stuff. That's why I've been diversifying into consumer staples for probably about the last 6 months. My money, instead of putting it into dividend stocks, except for the portfolio that I'm building right now, because again, I want to kind of start the average buying into some of these, because if we are going into recession, as those falls, I can pick up a bunch of these things on sale, and then I can get the appreciation along with the dividend income as they come back, or the economy rebounds. Okay. And that's why that's important. But again, you could get out of stocks. You could go into bonds. You could go into gold. You could go into silver. I love gold and silver. I love commodities. I just like investing in general. So I try to invest in everything, diversify it out. But again, if you're interested in learning more about these things, you can join our 3T Warrior Academy. You can also head on over to my Instagram channel at Age of Jeremy and join my broadcast channel. So again, something to think about, that eventually we're going to hit a peak, things are going to come down, and we will go into a recession. And the longer that we stay optimistic about not going into recession, the bigger the bubble is going to get. And when that bubble kind of comes down, or we start getting a pullback, the bigger the pullback is going to be. So start preparing yourself now. Last week, maybe 2 Sundays, not this last Sunday, but the Sunday before, I was at XRP Las Vegas, and I was gracious enough to be able to have a conversation with the Chief Revenue Officer of Uphold. And she is Nancy Beaton's her name. She's a very kind, seems like a very kind, caring woman. And she's always been nice and kind to me. So again, I don't do most of my exchange trading on Uphold, but it is an exchange that you could do for your cryptocurrency. I mainly use Coinbase, but we were having a conversation with her, and because she's a chief revenue officer, I won't go into the context of the conversation because it's a little private, but having a conversation with her, and it made me really start to think about the purpose of like a chief revenue officer and what revenue officers focus on, and why I get so frustrated at myself sometimes as I'm moving forward in my businesses, because I continuously forget or continuously don't make my focal point on revenue generating activities. As the owner and the founder of a business, your number one job should be to put everybody in roles for the operation and the running of the business, so you can focus on either high level running the business, and or depending on the size of your business, being the chief revenue officer along with the chief executive officer of the business. And I think that we just sometimes forget that revenue is really the only fucking thing that really matters in a business, especially over the first 10, 15 years. If it, it's, again, profit's important, but as long as you have a plan in place to get that revenue to where it needs to be while managing those expenses, you're going to create profit long term. And businesses need to do a much stronger job. My businesses need to do a much stronger job with focusing on those revenue generating activities, especially for the ones that I am just getting off the ground, that are just getting going. And one of the things that businesses do to run this is to have a chief revenue officer. So again, that's why I'm saying if you don't have the resources to hire a chief revenue officer, you have to be the chief revenue officer. And so the goal then, as you're building your business, is to offload all the operational duties so you don't get stuck doing them, and you can solely focus on building the revenue inside of your business. Now, when we think about revenue, and I've mentioned this before, but I go back to these for myself, because again, the whole point of this podcast is for you to understand the things that I'm dealing with for me, and then sharing those with you. So when I think about, we're going to talk about Age Radio. When I think about revenue for Age of Radio, we're an ad revenue focused business. So these last 2 years, I brought on 2 individuals to help with those sales, and we are working to get better at it. I unfortunately didn't hire for skill as I should have in some of these areas. And I didn't hire for the skill, and I hired the people that I thought that I could get to the place of the skill. The problem is I I didn't have the time allotment to put into the energy that I probably should have put into both of these individuals to get them to the point where they could be getting deals and selling. Or what I really should have done is went out and found account executives or ad executives to come into the business. But the problem was I didn't have the resources to hire them or to get them or get the leads in place to get over to them that they require to be successful at that. And now I'm learning that and trying to get better at that as we're moving forward. And the reason why revenue is so important, because revenue is essentially oxygen for a business. Most of the time when we go out and we look at content from a business standpoint or entrepreneurship content, we're traditionally hearing things about branding, we're hearing things about culture, we're hearing things about vision, and we're hearing things about innovation. But at the end of the day, the only thing that matters to make any of those things survive is revenue. Revenue can fund the hiring, revenue can fund the expansion, revenue can fund the technology, revenue can fund the marketing, revenue can fund the innovation, and revenue can fund the stability of a business. So your whole goal should be, I need to make more and more and more and more and more and more revenue until the point where you have so much revenue that then you can start managing those expenses a lot better as that revenue comes in. And that's and it's funny because I say this and I think about where we were at with our businesses. I sat down and I talked to CJV and I said, look, CJV, we're focusing way too much on expenses. We just need to focus on revenue. You go focus only on revenue. Don't focus about cutting money. I will manage the fuck out of that. You go, because you're in this full time at 3T Fitness, which is now 3T Warrior Academy, and you just go focus on revenue. And he went and focused on revenue, and then we were able to get to a point where we can manage the expenses and we had a bunch of profit, right? And so I'm thinking, looking at everything that I'm doing in all my businesses, I'm like, okay, well, I'm not doing the thing that I recommended. And sometimes people can recommend things that they can't do, but then when you have someone that can do it like CJV and he hears that, then he can go and run with it. And that's one of the reasons why I think that we make such a great business partnership. But again, me thinking about that, I don't focus on that. And that's one of the biggest things that I have to get better at, that I continuously try to get better at, because without revenue, everything else specifically dies. And so if you, like me, I'm the chief revenue officer in my businesses that aren't, growing and past that 7-figure mark, my goal should be sales. My goal should be partnership. My goal should be marketing alignment. My goal should be revenue strategy, customer growth, and retention. I'm going to say that again. Your goal and my goal as a CEO, if we do not have the revenue that we need, nothing else fucking matters except for sales, partnerships, marketing alignment, revenue strategy, customer growth, and retention. I'm going to say it one more time. Sales, partnerships, marketing alignment, revenue strategy, customer growth, and retention. If you just solely focus on making fucking money, you will eventually then make that money, and then you can go and do what you need to do with your business. And again, for me, business and making the revenue is about scaling those businesses. People have always made fun of me for my entire time being an entrepreneur because I don't think of anything as a small business. I think of things as these big organizations that are going to grow and make me fucking billions and trillions of dollars. And that's what they do. That's one thing that I've done well, is the way that I think about that. But then when I start these new smaller projects, sometimes I forget about the revenue piece of it, and then I'm running the rest of it like it's this big giant thing. So I guess as far as those two things, I guess some of that critiquing is valid, but at the same time, when you're thinking about the scaling and the thing growing larger and larger and larger, that's how you get to the place where it's so large, right? If I hadn't done that, we wouldn't have been able to get to the point we are with 3T Warrior Academy. We wouldn't have been able to get to the point that we are with Freedom Insurance. But again, the sales, the partnerships, the marketing alignment, the revenue strategy, customer growth, and retention are super, super important. One of the things that's also important with this is when you're thinking about how you're going to grow that revenue, you have to have that long-term growth in mind about what you're trying to do. And so in that regard, when I think about me, and for Age of Radio, that part I've done really, really well. I sat down, looked at all of the things that we sucked at that would prevent us from getting more revenue, and then I started implementing those specific things. The one thing that I beat myself up over all the time with is just not being able to have enough time to put into the people that I need to get to the point where they're confident and they're closing those specific deals. And again, Age of Radio is a lot different when it comes from 3T Warrior Academy, because of the fact 3T Warrior Academy is retail sales, right? Or consumer sales, like business B2C, business to consumer, where Age of Radio is business to business. And I haven't gotten to the point where I'm good enough at those business to business relationships or putting the activities in place for those business to business relationships and making it a regular reoccurring time slot in my day. And that is one of the things that I am solely focused on, that I am going to improve to get Age of Radio to be what it is meant to be, which is the number one indie media and entertainment company on the planet with $1 billion in valuation. But again, it all comes back to being able to create revenue. The next thing that you have to do is you have to ask yourself these questions. What creates value? What problems are we solving? Why should people give a fuck about what you're doing? How can we make it scalable? And how do we increase that retention? The other thing that I would say, and this is something that I'm working on, is understanding negotiation and communication a lot better. There's some courses that I found on negotiation, because me being in human design, I'm a generator, but in human design is an astrological brief overview, an astrological way to understand a human being so that they can understand how they work, so that they can make better decisions and life outcomes. It's kind of like astrology. Okay. And astrology is a component of it. But for me, I'm a generator. And so and not only am I a generator, but one of my lines is a networking line. And what that means for the most part is that I make most of my wealth by networking with people. Okay. And so it's really important that I understand how to speak better, how to write better, how to pitch better, how to interview better, because when I'm going out there and building these relationships, I need to be out there building relationships. That's what I'm good at. So if I know that that's what I'm good at and that's where my wealth comes from, why am I not out there doing these revenue generating things that require communication, that require negotiation, that require the networking aspect of it? Because that's how partnerships are built. And business to business sales is really strong freaking partnerships with other specific businesses. So again, for me, that really means improving my negotiation and my communication and my networking skills. And I encourage you as a CEO, if you don't have a chief revenue officer, as most small businesses don't and won't for a while, you have to be that chief revenue officer. So you have to do these activities. So the thing that I want you to do is I want you to make a list of everything that you do throughout the week. Whatever meeting it is, whatever, you have planned to do during your week as far as activities go for your work week, not for like your personal life. And in that, if that thing is not, does this create, and ask yourself, okay? Ask yourself this. Does this create revenue for me? No. Does this create revenue for me? No. Does this? Yes. For the ones that are no, is that something that someone else can do? And if it is, that person needs to do it. And if it's not, ask yourself, does this have to happen? And if the answer is no, get it off of your calendar. The only things that you should be focusing on is getting rid of all of the noise. CJV likes to call it signal. Get zoned in or signaled in, get rid of the noise, and focus on the things that generate the revenue for you. When I think about doing this podcast, this generates, not only does it physically generate revenue for me, it also is the thing that gets our brand out there as content marketing to build relationships. The same thing with the New Wealth Transfer podcast. The same thing with Mercury, our show about podcasting and pop culture news. These are content marketing pieces that drive in relationships that we can then build those relationships and partner with to provide value to that business in the form of however that is. For us, it's ad revenue. Okay. And you need to think about that for yourself, and you need to do that for yourself and your business as well. Just get in on the activities that drive the revenue, signal in on those, go hard on those, and you'll be able to move your business forward. And with that, as I always say, be thankful, grateful, and kind, and we'll talk with you soon. Bye.
Tell me, how does it feel? Tell me, how does it feel? I see the meaning of life in your eyes. It's like swimming in the ocean at night. And when I'm with you, it's like I'm on fire. Nothing is real outside myself and your smile lines. Bring me down with sweet soft sound. My name, the way it sparkles when it leaves your mouth. You fill my soul